I want to go to this other issue because I had myself even asking a whole lot of questions, and it's pretty complicated, but it's pretty important. Because this week, shares in a little-known American video game company soared by almost 15 Wall Street points and sent hedge funds into a tailspin. Stocks in struggling gaming retailer GameStop rocketed from $40 to $400 in a matter of days. It's all part of an extraordinary tale involving social media platform Reddit, short-changed short sellers, and now the Democratic Congresswoman, you'll know her, AOC, joining me from Sydney to make sense of it all, business commentator and founder of the Switzer Group, Peter Switzer. All right, help me out here. It's complicated, I know, but it's really important, Switzer, as I said. The revenge of the nerd investor, you call it. In plain English, it's an extraordinary yarn. What's happened here?
It is extraordinary. And look, we've got to put this in context. Reddit is the 12th most visited website in the world. It's owned by a company called Advanced Publications, which owns Condé Nast, that means, and Vogue, and all these it's a serious company. Now, it's created this website, and this website is all for forums where people get in there and chat and have associations. And all my staff, I've asked them about Reddit. I didn't know much about it. And some of my staff go there to talk about soccer or talk about cars. But there's a group that are investors. And they've looked at a company called GameStop, and GameStop is one of the biggest video companies in the world, but it's old-fashioned video. It's a shop. It's not as much online as some of the new age businesses are. And so short sellers, and these are hedge funds who try to identify a company that looks vulnerable. And what they'll do is they'll start selling the shares off on the idea that they can actually drive the share price down. Now, they don't own the shares. You'll hate this, Peter. I'm sure you'll come across this. They borrow the shares from fund managers like super funds, and Australian super funds do it. They borrow the shares. They borrow them at the prevailing market price, but then by selling it, it drives the share price down. Now, these people in this forum said, yeah, these guys are sort of manipulating the share price. What if we do the opposite and get together and we all buy it and we drive the share price up? Well, they actually did that, and then the short sellers from the hedge funds, they didn't start to panic because they need the share price to fall. And so they desperately get in and start buying the stock again to try and minimise their losses. And so this is why GameStop went up from $40 to $400. There's another company called Bed Bath & Beyond. It's in there as well, another one called AMC. And so it's basically these small investors colluding, and that's the important point, Peter. We would never permit companies to collude, or we try to stop it. But what happens when little guys, shareholders, collude to influence the share price? This is a big problem for regulators.
Well, hang on, let me just jump in there. Yeah, let me just jump in there on the difference between collusion and coordinated buying, and whether there is a distinction, and why is what the little guys are doing in terms of buying in a coordinated sense, why is that dubious? Some would say illegal, whereas what the hedge funds are doing is celebrated. It's the stories of Wall Street.
Yeah, well, the hedge funds need to be controlled. We saw recently here in Australia, Tyro Payments is a very good company, had problems with one of its terminals, and so a company called Viceroy put a report out. It gave it to journalists first, released it at 11 o'clock on a Friday about 2 weeks ago, and the market just saw this and panicked and sold off. When the company was able to respond to this report, they found 10 false statements, and then the share price, started to come back. Now, so these short sellers are not what you might call the innocents in the game, and the coordinated buying, as you're calling it, or colluded buying, which I call it, is like an offset against those bad guys versus good guys who probably are behaving badly, and regulators would worry about, because if they succeed here, Peter, they then could start getting together each week and say, okay, this company now, let's go for this company. They could drive it up, and they could agree then to sell it at a certain price. So regulators are going to have to be worried about it. But the bottom line is it's really been interesting seeing the little guys getting stuck into their hedge funds and the short sellers who've been getting away with blue murder for a long time. It's going to force the regulators to act on both sides, I think.
Yeah, well, that's my point. I think I'm not saying what little guys are doing is something you should be applauding, but if the regulator's going to go after them, there has to be some sort of attention put into these hedge funds. Afterpay, they've also been hit hard, yesterday in particular. What's happening there?
Yep. Well, Afterpay is a company that's really rocketed along, and short sellers believe that the price is too high, and so they short sell Afterpay stock on the basis they try to make some money. Now, I don't think there's been a false report put out in Afterpay, and short sellers are quite entitled to do that sort of thing. And by the way, let me tell you this. Analysts out there looking at Afterpay, I think Morgan Stanley has a potential price around $150, which Afterpay has gone to. I think it would drop to about $136 today. But UBS thinks it's only worth $30, and it's out there in the public saying we only think it's worth $30. So it's fair enough to have different prices from experts on share prices of various companies. But what's been going on with some short sellers putting out, and by the way, Jerry Harvey, he's a victim of this kind of thing. A foreign report is put together. They put it out for journalists. Journalists in Australia cover it, and Jerry can't sue them. And these reports have been arguably false. And they've suggested that the company's accounts aren't right. So therefore, Jerry goes to a big four accounting company that should be able to get it right, but he can't sue them. And the market has reacted when these reports have come out. So this whole story, while exciting on one level, I think is going to force regulators both in Australia and the US to seriously look at how they deal with short sellers.
I tell you, it's like being at the races in the betting ring. I tell you, this stuff, I'm not sure it's as transparent as it should be, and any wonder housing prices are on the up and up and up, because I think bricks and mortar is where people, or a lot of people, feel confident to put their hard-earned cash. Peter Switzer, thank you for your time.